Tesla stock has reached a new all-time high, surpassing a market capitalization of $900 billion. Until somewhat recently, Tesla was a rare pure play in all-electric vehicles and sustainable energy on the public market. It attracted a lot of retail and institutional investors who bet that the company would be able to achieve the volume production of its vehicles. The bet has paid off. In today's video, we will be showing you how Tesla lost $900 billion. Without further ado, let's begin. Tesla gradually increased the production of its vehicles, and last quarter, it hit the important milestone of achieving an annual run rate of 1 million electric cars. It helped push Tesla's stock up over the last few days, and it has just now hit a new all-time high at $907 per share. In turn, it pushed the automaker's valuation to a new record of $908 billion, which is more than almost half of the auto industry put together. Of course, most Tesla investors would argue that the company is not comparable to most other automakers. Tesla is addressing both the problem of emissions at the tailpipe with electric cars, and it is also trying to fuel them with clean energy through its Tesla Energy division that installs solar and energy storage. In recent years, CEO Elon Musk has mostly stayed away from commenting on Tesla's rapidly increasing valuation. If he would, it was generally to agree that it was too high. In an email to employees 2 years ago, the CEO said to ignore the stock price, as he believed it to be a distraction. However, he didn't follow his own advice just last month. In another email to employees obtained by Electric, Musk said that Tesla is worth $3,000 a share if they execute really well. This stock price target is for 2025, and it has been introduced by ARK Invest, a fund that has recently been selling a lot of its Tesla shares. The tech billionaire lost more than half of his fortune between November 2021 and December 2022, according to the Bloomberg Billionaires Index, largely due to the collapse of Tesla stock during that time. The $208 billion wiped from Mr. Musk's net worth is roughly equivalent to the annual GDP of Greece. The amount lost is also more than the total net worth of the current world's richest person, Bernard Arnault. After topping the rich list for most of the year, Mr. Musk lost his place to the French business magnate earlier this month, though remains ahead of other U.S. tech billionaires that have dominated the list in recent years. Mr. Musk's net worth peaked at $338 billion in November 2021, according to the Bloomberg Billionaires Index, coinciding with the fortunes of Tesla. The electric car maker has lost roughly 70% of its value in 2022 following production delays in China, vehicle recalls, and concerns among investors that its CEO has been distracted by his new role as head of Twitter. Tesla's market cap is down by nearly $900 billion since November 2021, causing it to drop out of the top 10 most valuable companies. Despite the losses, Tesla remains the world's most valuable car maker by a distance, with its losses over the last year equivalent to the combined market cap of all other automakers. In a recent email to Tesla staff, Mr. Musk wrote that he believed Tesla will become the most valuable company on Earth in the long term. "Don't be too bothered by stock market craziness," he wrote, according to Reuters. "As we demonstrate continued excellent performance, the market will recognize that." Mr. Musk rarely speaks of his wealth, though did explain his ambitions for his fortune in a Twitter thread in 2018. "You should ask why I would want money," he wrote. "About half my money is intended to help problems on Earth, and half to help establish a self-sustaining city on Mars to ensure the continuation of life, or all species, in case Earth gets hit by a meteor, as the dinosaurs or World War III happens, and we destroy ourselves." Other U.S. billionaires have seen their wealth decline significantly over the last year, with the tech-heavy Nasdaq falling by around a third in 2022. Microsoft's Bill Gates, Amazon's Jeff Bezos, Oracle's Larry Ellison, and Google's Larry Page have lost more than $180 billion combined since January. The 53-year-old's wealth decline spared Amazon founder Jeff Bezos from taking the Guinness World Record. Bezos' $80 billion loss in 2022 would have firmly given him the largest loss title were it not for Musk. Fellow tech CEO Mark Zuckerberg also broke Masayoshi Son's record with his $78 billion loss. Musk's fortune once sat as high as $320 billion in late 2021. As of January 10, Forbes estimates that his net worth sits at $142.1 billion, making him the number 2 richest person in the world ahead of India's Gautam Adani, $125.1 billion. While the true figure is unclear, Musk's losses appear to easily surpass those of the previous record holder, Japanese tech investor Masayoshi Son, who lost $58.6 billion in 2000. Forbes reported that Musk's net worth dropped from a peak of $320 billion in November 2021 to $137 billion on Tuesday. The magazine attributed Musk's steep decline in net worth to shares of Tesla, of which Musk is CEO and the largest shareholder, falling by 65%. Forbes reported that the drop occurred almost entirely after Musk announced his $44 billion acquisition of Twitter in April. Musk sold $7 billion worth of Tesla stock as he was trying to finance his deal to buy the social media company, and another $4 billion in November. He sold another $3.58 billion worth of stock last month, bringing his total sell-off to more than $23 billion since April. Musk lost his status as the world's wealthiest person as a result of Tesla's collapsing shares, being surpassed by French fashion and cosmetics magnate Bernard Arnault. Total net worth is expected to fall by more than $1.1 trillion from peak pandemic levels by the end of the year, although this will still be above pre-pandemic levels, expert predicts. This decline in household wealth will come at a time when Canadians are already feeling the squeeze of higher inflation and rising interest rates, the report says. This is particularly the case for Canadians at the lower end of the income scale, who spend a larger share of their earnings on non-discretionary or essential purchases like gas, food, and shelter. Higher-income households, meanwhile, have continued to spend on non-essentials such as travel and hospitality, which has kept overall spending strong and added to inflation pressures, according to the analysis. On Friday, Statistics Canada reported that Canadian real gross domestic product rose slightly by 0.1% in August. On Wednesday, the Bank of Canada hiked its key interest rate by half a percentage point to 3.75% in an effort to bring inflation down, with Governor Tiff Macklem suggesting more rate hikes are expected. The bank is predicting a possible recession in Canada in the first half of 2023. Rising interest rates and price pressure will lead Canadians to prioritize necessities such as groceries and gas, as well as debt, the expert analysis says. Expert estimates households will need to set aside as much as 15% of their take-home pay just to service debt, half of it due to mortgage costs. Canadian spending appears to have plateaued in the summer after rising in the spring following Omicron-induced lockdowns, the report says. So guys, let me know your thoughts down in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.